Hey guys, apa kabar? Welcome back to my channel. I'm Huat Equity. I share simple and data-based breakdowns in Bursa, US and Singapore using real numbers and the big macro story behind them. If you enjoy content like this, make sure to subscribe, hit the notification bell and share this with someone who would find it helpful. 2026 is shaping up to be an action-packed year for Malaysia. We have the RMK13 kicking off, the data center expansion hitting its stride, and of course Visit Malaysia 2026. If you don't want to panic kepala picking individual stocks, ETFs are the way to go. So in this video, I'm sharing 5 Bursa listed ETFs I'm watching for 2026. I'll go through them one by one, what it tracks, why it fits the 2026 setup, and one thing to watch out for. Alright, let's start. First, I've got the FTSE4Good Bursa Malaysia ETF, ticker 0820EA. When I want Malaysia exposure but I want it a bit more clean and solid, this is the basket I look at. This is Malaysia's first ETF built around the ESG theme, so for me it feels like a quality filter, less drama, more discipline, and numbers wise it's not a crazy mover, which I'm okay with. As of late December 2025, NAV is around 1.76. The 6-month return is more than 6%. For 2026, what makes this ETF more attractive to me is the green direction under RMK13. RMK13 is the government's 5-year spending plan, and the tone is clear, more focus on renewables, grid upgrades, and cleaner infrastructure. When that green narrative gets stronger, money tends to flow into the more responsible, better managed big names, and that's exactly the kind of basket this ETF is built around. The main risk is still simple. If Bursa slows, this slows too. The second one I'm watching is the TradePlus Shariah Gold Tracker 0828EA. This is my sleep well counter. Even if the ringgit fluctuates or US inflation gets messy, 0828EA tracks physical gold. No need to store gold bars under your bed, just buy the ticker. So I don't hold this to flex or to beat stocks. I hold it so I don't panic when markets turn noisy. When Bursa is calm, it's still useful as a diversifier. When things get volatile, it usually does its job as a hedge. It's also very straightforward. It tracks physical gold. At least 95% is backed by bullion, and I don't need to deal with storage myself. NAV was around 5.57 on. The only catch is opportunity cost. If markets go full risk on and equities fly, gold can look boring, and I'm fine with that because this one is insurance. Alright, now for my Malaysia blue chip basket, the EQ8 Dow Jones Islamic Market Malaysia Titans 25 ETF, ticker 0821EA. This is my Malaysia big names basket. 25 names, one trade, easy to own, and honestly more attractive than a fixed deposit because it's more flexible. I like it because I don't need to guess which single blue chip will outperform. I just own the basket and move on. Performance-wise, it's been more flat lately. On 29 December 2025, the NAV is around 0.973, YTD about minus 2.3%. That sounds like not very exciting, right? But for me, this is exactly when I start looking. When a blue chip basket is quiet, it can be a good time to enter before the 2026 cycle turns up. Of course, risk is the same as any equity basket. If the market sells off, this one also gets hit. Now let's turn to the fourth one, ABF Malaysia Bond Index Fund, ticker 0800EA. This is basically a basket of ringgit government and quasi-government bonds, and it's built to track a bond index, so you're not betting on one issuer only. A lot of stock investors complain that bonds are too slow, but a roughly 6% return this year has already beaten many retail portfolios. As of late December 2025, price was around 1.23 with a 1-year return of about 5.68%. It also pays distributions, and that cash flow feeling is very real when markets get noisy. What makes it feel even more relevant going into 2026 is the rate and inflation backdrop. Bank Negara cut the OPR to 2.75% in July 2025 and kept it there after that, and they also said inflation is expected to stay moderate into 2026. If rates stay more stable, bond funds like ABF usually keep giving that calm, steady vibe, and that helps me stay invested instead of overreacting when Bursa gets noisy. And for my US exposure without stock picking, I watch the EQ8 Dow Jones US Titans 50, ticker 0827EA. I use this to capture the Magnificent 7 and the US tech AI story, but in a Sharia compliant way, and it's how I diversify outside Malaysia without choosing individual counters. On the 25th of December 2025, NAV is around 3.55 and YTD is about 20%. One extra reason I like this, Malaysians always worry about that US dividend withholding tax when buying US stocks directly. With a Bursa listed ETF, the tax handling can feel simpler and less headache, but still check the fund's fact sheet and your own tax situation. Just remember this one is USD sensitive. If ringgit gets too strong, your gains might get eaten by currency conversion. So that's my 5 ETF watch list for 2026. The FTSE4Good ETF for Malaysia ESG quality exposure, and a lot of its holdings like Tenaga or YTL are also the core infrastructure names that can benefit when the data center boom gets bigger. 0828EA for gold protection and hedging, Malaysia Titans for Sharia compliant, Malaysia blue chips, ABF Bond Fund for Stability and Distributions, 0827EA for Shariah compliant US Mega Cap Diversification. Now I want to hear from you. For 2026, do you think the ringgit strengthens or weakens against the US dollar, and why? And which ETF would you pick as your core and which one as your hedge? Comment below lah, I read them. And if you enjoyed this, like and subscribe for more Malaysia market breakdowns. Please remember, this video is for sharing and education only. It is not financial advice. Do your own research and manage your risk.